What's up, everybody? Michael and Coco here. You're watching episode 34 of the Weekly Scan.
The Weekly Scan.
You're cute. The Weekly Scan is all about finding opportunities in the stock market for the week ahead. We're going to go over today a couple of things that have been on my radar. We're going to look from a long perspective on one stock, and then we're going to go into a short perspective, which I don't typically do, but I find it to be somewhat necessary, and I'm going to talk more about that in the things to consider section. Before we get into that section, we're going to go ahead and go over my current results for the Weekly Scan. I don't want to waste any more time. Let's go ahead and hop into the first page here. First off, if you're new here, welcome to the channel. I started this on 9/7. The Weekly Scan started way back when, but then people wanted me to start keeping track of the portfolio and the stocks that I trade and kind of giving updates. Well, just so you know, I started 9/7, $3,000. My last episode, I was at 32.52. So, in about just over a month's time, we had about an 8 to 10% gain. And now we're standing on the current episode up 4,079. You might be saying to yourself, how'd you go up $800 basically? Total up at 36%. Well, I saw an opportunity for a quick scalp trade for an options position. So I went ahead and did that and obviously blew up quite significantly on that trade, making about $800. Now, just to preface all of this, okay? Do not let complacency get in the way of your trading habits. Now, why am I saying that? Well, I've only been going into positions, small positions around, 5% of the $3,000, portfolio. So a very small position, and that's why it got to 32.52 quite slowly. Now, that's very important because I was still able to make about 8 to 10% in a short period of time. And then I got kind of bored and complacent myself and just took one larger trade. Let's go ahead into the things to consider section. Things to consider on this video. All right, this is important. On my last episode, I talked about 3 stocks. None of those 3 stocks I entered in. Why did I not enter in? Well, we woke up on Monday with a big gap down, just basically saying, okay, those positions are no good for me anymore. So going into today and going into this week, I want everyone to understand the reason as to why I haven't been trading recently, this last week and a half or 2 weeks, and then why I'm all of a sudden picking it back up, okay? And then I'm going to give you kind of like, maybe I'm biased right now, maybe I'm not. But the reason why I haven't been trading recently is simply because, if you watch my market briefs, you already know this, is the rapid movement to the upside direction. We had the seasonality chart that we were going over in the market briefs, so the presidential election. We had stuff around the vaccine. We have stimulus news that was, in the headlines. So we had a lot of different outside factors. So really, we're living in a time right now where we haven't seen the market act or do anything of this nature ever before. And the people that do say or try to find ways that, it's been just like this, or they talk in terms of certainty, you got to be very careful with those type of people, because the more certain you are in a market that's in uncharted territory, you can become very complacent. Now, if you were to catch those upside moves this last couple of weeks or whatever, where there was just massive gains to the upside, there's a strong possibility for many people out there that got to see these big gains to the upside, they may become very complacent with their gains. So they end up doing the wrong thing. You can have 9 out of 10 trades correct, but that one trade that you get wrong could really rip up a portfolio. All right, so now why am I getting back into these charts? We're going to go over some charts here momentarily, a long one and then a short one, and kind of give you, some context of why I'm looking in this direction. The reason why I'm trying to get back into it now is because we've seen a lot of things in the overextended territory. Is there a possibility that things could go higher? Yes. Where's my bias stand and why have I been kind of outside of the market? Well, one, I've been outside of the market, so I might be getting just a little bit bored. So I want you to understand, okay, as a disclaimer, these aren't recommendations by any means. And this could just be because I'm just bored from sitting on the sidelines. So I want you to really understand where my mindset is at, and then you can determine for yourself what the chart actually says. All right, so keep that in mind. I have been out on the sidelines, kind of getting impatient from just waiting on the sidelines, and now I'm looking to get back in. So when I'm reading the charts, they're telling me a certain thing, and it may or may not go higher, or potentially, like I said, it could rip down to the downside. So we're going to start off with the first ticker symbol. This is from a long perspective. I'm going to talk about SPCE. I have a pretty long time frame right now. This is a symmetrical triangle pattern on SPCE, and we've been seeing this big rip to the upside. Now, what I want to point out this is a log scale chart, is we recently broke out of this symmetrical triangle. This kind of looks like the weekly time frame for Bitcoin. It's kind of funny. If you pull that up, you'll see the similarity. Now we broke out. We got rejected right around 2450. 2450 seems to be a pretty stubborn area by looking back through the history of the chart. You can see a tag there. That was in August. A tag here in mid-October, and then another tag just as of yesterday. So what does that tell me? This resistant line can very well act as support if we start breaking above it. Now the pattern itself looks pretty strong. We've already broke out. Now we're back testing it right now. So how would I trade this? Well, if you wanted to trade SPCE from a long perspective, I would highly recommend that you wait for confirmation for a daily close or a lot of volume above this 2450 marker, and we start seeing confirmation of a real breakout. If we break above this line, chances are we'll have more momentum, people pushing into that specific trade. Now, the current candles, how they're positioned, don't look all too good, but keep in mind the context is still technically bullish on a breakout. You have the moving averages sloping up, but then you have a full engulfing candle, a red candle, so gapped up, and then closed pretty much, or traded all the way, down past the low of the previous day. So that's kind of a bearish setup. That's why you need to kind of wait for confirmation in this given environment. All right, so that is the long position trade. That's kind of something that I'll be keeping an eye on for a break above 2450. Now I want to start talking about the semiconductors. This is where it's going to get a little bit more interesting, and why I want you to pay, a close attention to where I'm coming from, and then make that kind of decision for yourself if that makes sense to you. So, because you can be bullish, you can read these charts as very bullish, you can read them as the potentially bearish. So, keep an open mind when I'm going through these. So first off, I ran a very simple short type of scan. So you're going to learn something new here. This is one of my scans for just seeing if stocks, what stocks might be turning around. So basically, they've been running up and now they might be potentially showing weakness. So what do? I go beta over 1. So it's a volatile stock. Candlestick, I want an inverted hammer. So an inverted hammer, you probably know what that looks like. It looks like a hammer upside down. That could be a reversal type candle in certain context, all right? Certain context. And then I did price above $10. That's all I really did. Then I double clicked the volume to have the volume up top, the highest up top, and then the lowest at the bottom. Now what I want to point out here is just look at all the yellow highlighted stocks. These are all from the semiconductor sector. So what I find interesting is, on the inverted hammer, we're seeing a lot of action with various stocks in the semiconductor section. So this made me think, and by the way, there's 3 in the top 5 of the highest volume. So there's going to be a lot of eyes on this industry, the semiconductors. Even the sector, though, there's even more on the technology side. We would have been able to add a couple more, like this one, Western Digital and Seagate. So it just took up quite a bit from this sector, and now looking at the industry. So I wanted to pull up that specific industry, the semiconductors. Now I did this on my market brief. I talked about it in yesterday's conclusion. Now I'm bringing up the SOXX. This is the iShares semiconductor ETF, okay? And I want to just point out a specific, pattern. One, it's a rising wedge. We have a slight bearish divergence here at the top. We have an inverted hammer. After seeing a hanging man type candle, this is the weekly time frame. I need context. We're above the Bollinger Bands, or we just basically tag the upper range of the Bollinger Bands, and we're a little bit disconnected from the 5 EMA. You look at the stochastics, we're in a bearish divergence. Last time we had bearish divergence here, boom, down to the downside, bearish divergence, boom to the downside, bearish divergence, boom to the downside. This doesn't mean that the SOXX can't keep going up. Okay, we've seen it before. When it gets overextended, pulls back a little bit and then moves up. This trend line right now goes back to late 2018 to the beginning of 2019. You can see it touch down here, support 1, 2, 3, 4, 5, 6, multiple weeks in a row, another one here. Then we had to gap down through it in order to really crash. Then it's acting as resistance here in August. And again, we're kind of running into that upper resistance band too. So we have a lot of confluence for resistance. All right. Now, when I scope in a little bit closer on the daily time frame, this one doesn't look as bad, but I want to point out it's an inverted hammer. Got rejected basically right around 350. So if we start seeing it go above and getting above 350 to 355, I think that there's more room to run for the bulls. So what do I potentially see here? First off, we have a rising kind of wedge pattern that it broke out of and above. We're still above the 5 EMA, so the bulls are in control. We're not extended on the upper side of the Bollinger Band right now. So, it looks somewhat bullish. Now, however, if we start getting below the 5 EMA on the daily time frame, or even back into the symmetrical or rising wedge pattern, I think that this area right here can represent somewhat of a target area. So why can this potentially be a good short opportunity? Well, where the price action is currently, you would have a stop loss above 355, right? So just imagine that. So you'd enter in basically say if it opens up right around here tomorrow, on Monday, you have a stop loss above 355, and then look at the opportunity back into this target zone. It's a 3-to-1 risk versus reward ratio. You can get stopped out and it can keep going up. Big deal. But the trade itself sets up very nicely. Okay, here is one of the stocks that came up on the topper range of the scan. This is it on the weekly time frame. This is ticker symbol AMAT. The weekly time frame looks fairly good. We broke out of this upper resistance, but I want you to pay close attention to where this day started, or where it closed. It closed above the upper Bollinger Band, okay? It's an overextended move. The stochastics is moving into that overbought territory, and you have the RSI also moving into overbought territory on, the weekly time frame. Then you also have a slight negative, is that negative? Yeah, that's a negative divergence right there because it still hasn't reached higher than this previous. So it's very close, or it could be just more of a double top sort of thing there. So that's on the weekly time frame. Let's zoom in even more. And this is the daily time frame. We have a rising wedge, inverted hammer, overbought territory. All right. This is interesting to me because of the fact the lower trend line of this rising wedge pattern is right on the 5 EMA. So if we start breaking through 76 on this specific ticker symbol, we might see more downwards momentum. The current price action, how it's set up, can turn into, I believe that's called an evening star. It doesn't really matter what the name is. It matters what the psychology is. We saw a big green day, and then we're seeing some weakness right away. So if we start gapping down lower, then that could be a reversal type candlestick pattern. Where can it potentially fall to? Well, potentially around 70 to 72. And so if you actually traded this from the short side and have a stop loss above the high of this previous candle, that's a good 3-to-1 risk versus reward trade. Now, here it is on the 4-hour time frame. We're using multiple time frames to give good context. This does look like an evening star reversal type pattern. We had an inverted hammer on the previous 4-hour session, got above the Bollinger Band, and then we saw it close, the last 4 hours close below this candle. Now we're still above the 5 EMA here, and we're above the lower trend line, and we have these negative divergence patterns in place. All right, so overall, this ticker symbol, AMAT, looks like it might be correcting itself just a tad bit, and it's setting itself up for a potential good short opportunity. Now, once again, okay, I'm going to go back to the SOXX. Why am I showing you the SOXX? Well, that's the semiconductor ETF. It holds many semis in there. And it's good to watch the index or the ETF. You can look at the SOX if you want to look at the index. And, if it starts breaking through that, and some semis have not yet, the semis that are, individual semi stocks might show weakness very soon. Or if you see individual semis start to break down, that could be an early indicator that the ETFs and or the index might be coming down soon as well. Now, this doesn't mean that it's going to just crash down to all-time low levels, okay? And I also want to preface once again, I've been out of the market. I kind of feel a little impatient, like I want to get in. And you need to understand that this is bullish context. So you'd be taking a contrarian type trade right now. So you need to be very diligent with your stop losses. Now, to me, they make good sense for a risk versus reward trade. I can make, potentially 3 times my money and only risk, 1. So if I wanted to risk $1, I can potentially make 3 on this specific type trade. And then if I lost the trade, I lost $1. I would expand on that, but interesting to me to see all of this taking place. They're all running up on that kind of pattern, on my scan. It's showing the semis. I saw weakness in the transports. The Russell 2000 was another chart I talked about in yesterday's market brief, and that was looking very overextended on multiple time frames as well. So on this weekly scan, I did do it just a little bit differently. The portfolio overall is looking good. Took a little bit more risk than I usually do on an option trade where, it worked out in my favor. Cool to know. I wanted to make sure you understand where my head is at currently in the market and why I haven't been trading to the long side, simply just because it's been absolutely just bonkers in the market. It's so uncertain for me and it's hard to trade this. So I decided to make just one quick day trade. From a long perspective, there are a couple long, like stocks that do look good. I just wanted to show one that's a little bit more popular out there in the trading community, which was SPCE. It looks good. It looks like it's breaking out. It reminded me of the weekly time frame for Bitcoin. Not saying that that's going to happen with SPCE, but maybe, if the market continues to roar up, that can be a very good play. So I wanted to offer up, obviously, just a couple different aspects. I'm rambling on. All right, I'm rambling on, but that's all I got for you on this weekly scan. Really, actually, just as a quick note, I don't know if I've already said this already, but I have not committed to making these specific trades yet. It depends where the market opens up on Monday. If the market, if the market gaps and rips up on Monday, I would actually be more in tune to potentially short the RUT or the SOX, and even potentially that other individual stock, depending on what option activity it is, or if I can short sell if there's available shares on my platform. So that's one thing. And then if we see just this monster gap down take place, I probably wouldn't be getting into SPCE because that might affect that stock in the other various indices. And then honestly, I don't know how aggressive the move would already have taken if I would have missed it. So understand, I haven't taken these stocks yet. This is not by any means recommendations to you. This is just my thought process and I'm sharing it with you. That's all I got for you on the weekly scan. And folks, have a good weekend. Bye.